And welcome to the Global View, the show where we look at ways for investors to make money beyond the ASX-listed universe. I'm your host, Juliet Sarli. Well, on Friday, US markets were closed for the Juneteenth holiday. European shares, though, edged lower, with the stock 600 slipping by 0.2% as investors weighed renewed uncertainty in the Middle East after planned US-Iran talks were cancelled. Now, despite the softer finish, the stock 600 still posted a 0.4% gain for the week. In company news, ASML fell after addressing concerns over exports of advanced chip-making equipment to China. Locally, the federal government will extend fuel excise relief for another month, keeping petrol and diesel around 16 cents per litre cheaper through July. Prime Minister Anthony Albanese is saying the measures will save motorists about $11 a tank as households continue to face higher fuel costs linked to the ongoing conflict in the Middle East and disruptions to global oil supplies. Brent crude did take higher on Friday but stayed set for a weekly fall of around 8%. And of course, we are continuing to monitor the new headlines that are coming through out of the Middle East this morning. Iran walking out of these peace talks after US President Trump had another outburst warning America could strike the Islamic Republic over its support for Hezbollah, the militant group that Israel is fighting in Lebanon. So headlines really are going to drive markets today, with Vice President J.D. Vance meeting Iranian officials for the first talks under the interim peace deal. And gold prices coming under pressure. It posted a third straight weekly decline, pressured by a firmer US dollar and hawkish Federal Reserve. Copper down for a second straight session on Friday. Well, apart from more headlines, higher inflation drove a jump in the UK budget deficit in May. Britain's government running a budget deficit of £23.3 billion in May, up 30% on a year earlier. This comes as reports suggest British Prime Minister Keir Starmer will resign on Monday. Meanwhile, Canada's retail sales grew by 0.5% in April from March to 73 billion Canadian dollars, slightly missing expectations. The Aussie dollar is currently sitting at 70 US cents. While looking at the cryptocurrency market, Bitcoin and Ether continuing to fall in the wake of the Fed's interest rate decision, with Bitcoin holding just above 63 US $1,000 a coin. All right, let's get more on the overall macro picture now with Greg Smith from Generate Kiwi Saver. Good to see you, Greg. A lot of focus here on the peace negotiations, Iran walking out of these peace talks this morning.
Yeah, absolutely. It's not over yet, is it, by any means? But good morning to you, Juliet. But our market, for what it's worth, has opened 0.5% higher since the X50, so 13,564. But yeah, as you say, we're very much back to those soundbite-driven headlines. You sort of obviously there's been a lot of uncertainty though, hasn't there, since the conflict kicked off, and markets have actually sort of generally powered on. I think the big story there has been. Obviously, corporate earnings have been very, very strong. Obviously, there's been an element of not seeing the worst case scenarios, but it could change the situation if this drags on a bit longer, and particularly for central banks. Obviously, you had the Fed meet last week, you had the RBA, you had the Bank of England, so most of them are sort of waiting and seeing, aren't they? So it's not resolved yet. That has implications, obviously, for oil prices, which did fall back last week, and also those second round effects. So yeah, it's certainly going to be very much soundbite driven. Our market today, for what it's worth, we actually are higher, and the big mover is A2 milk. So they've received Chinese regulatory approval to make infant formula from their Pōkeno factory in Auckland. So you've seen an 8% rise in that stock this year, so it'll be stronger when it opens in Australia.
Yeah, absolutely. We love monitoring what happens with A2 milk when it has a big move in New Zealand as well. Just more broadly, how do you think markets are going to react if these peace talks stall, or versus if they're successful, I guess?
Yeah, I think we might go back to what we saw throughout the last 2 to 3 months, I suppose. Oil, when things aren't going so well, oil's up, market's down. And vice versa if we get some sort of progression. You sort of feel like there's still a lot of brinksmanship. You've got comments from Donald Trump and then comments back from Iran. So it seems, are these all sort of parts of the bargaining ploy? It's obviously the stakes are very, very high. But it does seem a little bit of a repeat in many ways from what we saw last year during the trade skirmishes, but completely different, of course, ramifications. So, yeah, I think if they stall, the markets, if you look at the US, are around record highs. Maybe they plateau for a little bit. I don't think that sort of sends any sort of correctionary phase or anything like that. I think that would be more to do with what the central banks sort of do, and we've had those meetings, so it'll be really until the next ones. But if we do get some progression, that might even mean a leg higher. We might go from a position of having central bank hikes to central bank cuts if oil's coming down. So yeah, bases are loaded, I suppose, as they say.
They certainly are. Now, in New Zealand as well, your National Party has announced some big proposed changes from superannuation or KiwiSaver. So heading to 12%, getting to what we are at by 2032 and compulsory, I believe. What are your thoughts? How might it impact the economy and market longer term?
Yeah, really interesting, Juliet. And we've got an election here in November, so lots of things on the agenda. Capital gains is something that's potentially also going to be discussed. We don't have that, but yeah, KiwiSaver, very relevant to us, very relevant to Generate. We're the fifth biggest KiwiSaver provider in New Zealand. But yeah, the national government has sort of piggybacked a little bit on Winston Peters, their coalition partners' proposal. So KiwiSaver compulsory from birth. This is our superannuation pot. A $1,500 kickstart, and then raising contribution rates, as you say, from 3.5% currently to 6%, and that would be matched by the employers. We have a slightly different system, so 6 plus 6 equals 12. And I think Kiwis are terrible savers. Contribution rates are probably the biggest part of it, and that's something we've been proposing and pushing for. So I certainly like those proposals. Getting there by 2032. We'd actually have one up on Australia. It took Australia 33 years to get to 12%. We'll be getting there in 25, hopefully. But yeah, we've got a much smaller superannuation pot than you have, and one that we certainly envy. But we're in about 130 billion. But yeah, the KiwiSaver at birth, that's good. But it's also really about those contribution rates. So around about a third of KiwiSaver members don't contribute here, and that's part of the issue. And we've got a massive retirement shortfall. So that can only be a good thing, raising contribution rates. They're also doing things like the government will contribute during parental leave, which we think is great, and also people living longer and working longer. KiwiSaver contributions from the employer will be mandated to continue post 65. I think the interesting thing about all this, Juliet, as well, is that NZ Super, which is the state superannuation, wasn't mentioned, and there's a view that they might increase the age from 65 to 67. But yeah, really, this is all about putting the onus back on individuals. There's a lot of detail to work out. The devil's in the detail, as I always say. So these are sort of political promises, if you like. But yeah, a good thing as long as they're executed well. I think for our economy, it can only be a positive thing. Obviously, there'll be more onus on corporates and so on, so that will have to be looked at. But yeah, certainly good for the savings side, making the country wealthier. And also perhaps getting a bit more into NZ Inc. So KiwiSaver funds are big investors in New Zealand corporates as well as offshore ones.
I like how you slipped in that you got there faster than Australia. It's not a competition, Greg, unless we're talking about who invented the pavlova, in which case it is Australia. No further comments on that one. What else have got your eye on this week?
Yeah, we're going to take our wins, though. We don't get many of them. But although both teams are doing pretty well in the World Cup, so we have been, so that was good. But yeah, like this week, obviously you've got your inflation numbers and labour market data for May this week. So obviously a bit of interest in that, given the RBA meeting last week. And I think it's a bit quiet locally here, but certainly interest in the US inflation and GDP. I thought the sort of projections from the Fed meeting last week were actually pretty tight. So in terms of, it wasn't a huge amount of dispersion when you look at sort of this year and into 2027. But long run, it gets a bit wider. So yeah, certainly interested in US inflation. But the big deal really is what happens with does the straight get moving again? Yeah, obviously central banks do focus primarily on core inflation, which strips out energy and food, but it is relevant because of those second order effects. GDP, as the US economy still holding together pretty well, I think that'll be certainly one to watch. I think we're looking at a projection around about 3.6% there for the read this week. So that'll be interesting. And then earnings, FedEx, obviously a big bellwether there. That's going to provide a bit of a read on on how things are and what the supply chains are doing. And Micron, that stock has had a huge run this year. The memory chip maker AI play extraordinaire. So I think there'll be a lot of interest in those results.
All right, Greg, really appreciate your time. Have a great trading day and week. Greg Smith there with us on the Global View.
Bye for now.
All right, before we go, we'll have a quick look at what we're expecting locally, particularly as we were talking about this peace deal with the US and Iran looking pretty shaky, down by 0.2%, but we could actually fall further than that. Of course, the market opening in just under 5 minutes' time. Stay with us. The Open is coming up next.